This is the Your Agent podcast, where Ren and Lauren get fit on finance, insurance, and teamwork. We will be covering topics with professionals from different industries to give our listeners the insight to be financially fit and motivate them through all walks of life. Special thanks to our friend Matt Pisani for his music in the background. You can go download free on all streaming platforms. This is the Your Agent podcast.
What's up, everybody? This is another episode on the Your Agent podcast. I have my good friend Elissa from She Does Credit, and she is not shy. She is awesome. She's full of energy, and she knows her stuff, and I think that's so important right now, more than ever, especially during these weird times where people are just, I feel, less money, more credit, and I think they're mismanaging their credit. I know, and I think I used to be one of these people. I'm like, okay, let me just, here you go. Here, give the cashier my card, and you're just sweating bullets. You're like, and then you see processing, approved. You're like, all right, sweet. All right, it went through. Good. People don't want to even look at their credit. They don't want to look at the balance. They know they're maxing it out, and I want you to share everything and anything, Credit 101, and the good thing is, we actually had some people that actually messaged me, and they had questions about Credit 101 too. So, you go for it. How long have you been doing this? Why do you love it? Who are you?
Who are you?
Who are you?
Well, my name is Elissa Costanza. Of course, you know my name, but just to tell everyone else. So I've been doing credit for like 3 years now. Okay. Really, I kind of got pushed into it. I didn't expect to do credit. Like, I used to be working as a corporate employee. I was working a 9 to 5, trying to make my money. I always did other things, and I wanted to buy a house. Nice. But when I wanted to buy a house, I didn't know the process to getting a house. All I kept hearing was, make sure you're at your job for 2 years, have a good job, save your money, and have good credit. And I'm like, but what does that mean? Like, how do I do this? Like, I had no idea. Like, I used to think that swiping my debit card would help me with my credit. Don't judge. I was young.
No, I used to thought do that too, actually.
I'm like, oh, I'm building it, but I didn't know. So actually, I was applying and looking for these first-time homebuyer programs. Like, I do a lot of research. Gotcha. Like me, I'm that person. I research everything. Okay. I like to know what I'm talking about. And I came across first-time homebuyer programs. We appreciate that. So I came across first-time homebuyer programs. Okay. And I always put off my credit because I was like, oh, I don't need to work on it now. I was going through some things and I was like, oh, the cost of it. But then once I realized that with these first-time homebuyer programs, they were giving down payment assistance, I went to work on it right away. Gotcha. I got started. My score went up. Okay. In just like about a month's time, I got approved for a first-time homebuyers grant. In total, between 3 different grants, I was approved for over $100,000 worth of down payment assistance. So then I'm like, if I could do this, imagine what credit could do. And that's the power of credit. Yeah. And, I just wanted to help my family and friends. We're in New York, so a lot of people think that by moving or going somewhere else, they would save money and, live better. But the key is financial literacy and understanding your finances and your credit. Yeah. So I've been doing this full time as an entrepreneur.
Boss
lady. I almost went like this 3, but it's been 2 years. I was like, wait, 2 years.
Sign language for me. Okay.
So.
Boss lady right there. Okay, so let's just wrap that up real quick. You need good credit just to get a grant.
Yeah, you need to show a certain score because, if these banks are looking to give you money or just to lend you anything, they have to see a history and good credit. Like
good history too.
Yeah, like people are
not any kind of history.
Yeah, like people are like, oh, where's the money for me to get this? It's like, but you have to qualify first. And it's worth it.
Like, I like to use simple analogies, and even, this could be a real story, but I had, like, one of my boys, from Queens. He wanted to borrow $10. I said, no. He's like, why not? I'm like, I gave you money in the past. You never pay me back. So I guess that would be, like, the same thing.
Yeah.
And what you
already know my story. Like, we spoke about this earlier. Like,
spoke for a long time.
Like we spoke about this earlier. Like if someone's not credible enough to pay back money or to pay their bills on time, how are they going to pay someone else? You know, we were speaking about that earlier.
Yeah.
That I'm dealing with somebody that I know, and they said I literally want my credit. I want it to go down on purpose.
Right.
That way, collections could take it over. And I'm like, how could you do that?
Yeah. Explain. Without putting that person on blast, explain. Maybe we'll just make up names. I don't know. Whatever. Okay. However, it's easy. That was new for me. I never heard anyone could ever think like that, and that's funny because I walk life in a certain way where if I hear that somebody did something and it's really ludicrous to hear it, I believe it because we're in a weird time now. Yeah. Lauren, on the other hand, if I tell her, oh, guess what so-and-so did? They did X, Y, Z. She's like, no one will ever do that. I'm like, you need to grow up on the streets. You just need to open up the news or something. Or check my boy's Instagram or something like that. So, yeah, maybe explain a little bit about that because I can't find that logic on Google.
Okay.
So what happened?
So, like, what happened? So, unfortunately, we're going through a crazy time right now. And a lot of people are in positions where they lost their jobs. They were furloughed. Yeah. You know, the income is not coming in. But then you have other people who are blessed to still be able to bring in income and they're stable and things like that. Yeah. Some people, I feel, are just irresponsible and they don't want to pay their bills. There's a difference between not being able to and then just saying screw it, you know? Right. And I came across someone who wanted a consultation. I actually know the person. And I'm going through it. And they literally said, I want my credit. I'm doing this. Oh, I'm sorry. I'm doing this on purpose because I want the collections to take over and so I don't have to pay it. Okay. And I said, that's not how any of this works. You have to, like, I literally did a detailed analysis with them. Let's look over here. You see all of these late payments we have to work on, right? You're above your utilization. You're running up your credit cards. And then you're going to want to go to collections. That's going to, that's going to take a little while because then that company is going to sell off your debt. Those are 3 different things that we're looking at. And not only that, but you're a professional. Some jobs randomly, like you.
Wait. She's a professional?
She's a yeah.
He, she, well, we don't
they're
know who
it is. Professional. Yeah, they're a professional.
Holy smokes.
So it's like some jobs will literally, like you have to read the fine print when you sign that contract or you come on board.
They're going to credit check you.
Right, because they think, like, if you can't handle your own personal life and your finances, why would I allow you to work for my company and handle that? I know a few people who are let go. In all honesty, there's a few clients that I have that are in the military. Listen, we had to write letters stating, hey, they're working on their credit. I had to take extra steps with them to show, like, that they're looking to settle account because it's so time sensitive. Yeah. They have to report to their sergeants or else you could get discharged. Gotcha. That's the severity of it.
Holy smokes.
I know people that have been executives for companies before they came to work with me. And they got random credit checks or background checks. Right. And they, one person had their car repossessed. Yeah. Someone else was late on their payments. Yeah. And they were let go or suspended. Wow. Because the jobs say, until you handle this, then you could come back. We'll see if your position is open. Wow. Those are real life situations that have happened, and it's unfortunate. Yeah. And you don't think, like, how could this affect me? That's my personal life. But if you're working for me, I want to know that you're responsible too.
Yeah, absolutely.
And you're on point.
For those that are just listening and you haven't watched the video yet, she's very passionate in what she does. So you really got to watch the YouTube video or Facebook video on this. Wow, that's really intense. And so just so I understand, right? The friend, the person, the client, the client. There we go. We'll use client now. They believe that if they miss their payments, don't pay it, and purposely let it go to collections, it will be written off, and therefore their credit will be better.
Yeah, like they don't have to pay that debt. Okay. And I'm like, if
I ever did that to my mom and dad, you know what would happen? And this is 90s.
Don't come home.
Don't come home. Don't come home. Oh my gosh.
But it's like me, I'm a little different. Like, I'm that person. I've always been like, even if I didn't have money, tell me what I owe you and I'll pay you back.
Exactly. Same here.
And that goes, but you know what? This is the thing though. What? That person actually owes me money. Jeez. So I was like, there was something that happened. I was like, when were you going to tell me like this was the bill and it was charged to my credit card?
Right.
Like, why didn't you tell me this? It's like, all right, you still owe that. You know? And I'm like thinking to myself, like, dang, like if you didn't want to pay your credit card bills, you know, what makes you? How could I believe that you're going to pay me? Right. They'll take that as a loss or whatever. But I'm like, she's like, oh, like, you know, I would never do that. I'm speaking to another girlfriend of mine, and she's like, yeah, they owe me money too. I was like,
oh my goodness. Yeah, no, I
no bad blood. It's just a lesson learned.
Yeah, but no, it's lesson learned. You know, you gotta be careful where you lend money to and whatnot. And
it's the same concept with credit, though.
Yeah, on a bigger scale.
If they see late payments and the fact that you're not paying your bills, why would somebody lend to you?
Right.
Would you lend to you?
No. I remember I have one of my boys. He owes me money since 2011.
Wow.
But
about to be 10 years.
Yeah, I know, exactly. A whole generation went by. But I'm not asking for the money or anything like that. I'm not dying for it or anything like that. It's more a responsibility and a principle, you know? Because it's the only way you're going to, if you're not going to listen to advice or read about the advice, at least maybe learn about the advice. And the problem is, like, people like that, they're going to learn so hard from the banks. You know? So, credit. Ooh. You love credit. She does credit. So, that's your hashtag. That's the name of your company.
That's my name, yeah. Okay. I just came into it because, you know, I was getting into credit and people would just be like, you know, she does credit. Like, you know, they would just point me out. So, you know, I trademarked it and...
Nice.
I just
trademarked too.
Yeah.
Okay, so if anybody wants to get it, you will lose it.
I went through that a few times.
I remember.
Yeah.
She will hunt you down if you take that. So
Not me, my lawyer too.
All right, there you go. And tell me more. What else do you have? You have a Facebook page, you have Instagram, you have a website. What else? You got TV shows, you got...
Yeah.
Let people know who you are, because I met other credit specialists. Nothing compared to you. You sound like you know what you're doing. You love what you're doing. But I need to know what is out there. Like, what do I have to type into Google to find you?
So you just type in She Does Credit. So my website is shedoescredit.com. I have a personal Instagram and a business Instagram, which is She Does Credit. The personal Instagram's Elissa J. Code. Like, I'm very transparent. I have 2 Facebooks. Actually, you might see 3 because one I got locked out of. Okay. It's from, like, years ago. Okay. But it's me.
Okay. Gotcha.
You know? But I really, like... So, I've been doing this a while. I didn't know that it would turn into this. I went on a show. Basically, I had one of the highest ratings. Nice. And a network reached out to me.
Hope we could get that here. Huh? Hope we could get that rating here.
You will, because you are the man. So, you know, I have one of the highest ratings, and they said we need, like, this information. You know, like, credit and finances is boring, but you're fun. I'm like, oh, thank you. I don't try, but thank you.
There you go. I agree.
I got signs. And I have a show coming out called She Does Credit that will be on cable TV in the next few weeks before the holidays. So.
Okay, before the holidays? Like before Thanksgiving or before Christmas?
Before Christmas.
Okay.
Yeah.
All right. So we'll definitely have to let everybody know. Maybe we come back here. Hopefully come back here soon then to do Credit 102. Because today is Credit 101. Right. That's the name of this episode.
And people have to know about insurance, too, because you saved my life when it came to insurance.
Oh, yeah. There we go. But today's about you. Okay. Thank you for the shout-out, though. No, but that's good. People need to know about that. Otherwise, they don't believe me when they see what I post,
Seriously?
You know? They need to hear it from non-insurance agents. No, thanks for that. So, Credit 101. I am thinking right off the top of my head, I'm thinking about a lot of students, high school, college age, under 30. By the way, happy belated.
Oh, thank you.
You're welcome. So, what do you have for the under 30 age group?
So, That's a time, we're trying to like figure our lives out. You're getting into your careers. You're trying to like figure your life out. You probably want to buy a house, figure out your finances, things like that.
Maybe just buy a new PlayStation 5 even, Yeah. I just got approved on bestbuy.com and I'm going to buy it right now.
Yeah.
That sounds smart.
I mean, it happens. You want what you want at that time. But, the most common thing is that people always say, I made these mistakes when I was younger. And that's a learning period. Right. But we have to move forward and correct that. Mm-hmm. So with students, it's pretty crazy that we get approved for all this money for a loan to go to school. Then you're trying to find a job to pay that back. Right? And the interest rates are crazy. Yeah. And then you can't get approved for other loans, like to get a house or a car. And I'm in the real estate field as well.
Yeah, you are.
I've seen people.
Boss lady.
Yeah. I've seen people get turned down for mortgages because of how much their student loans are. It's just crazy. So, I am partnered with a student loan company as well. They've helped. Nice. They've helped a lot of my clients with. It's a separate entity, but we're partnered with them. They've helped a lot of my clients between their interest rates, consolidation, seeing if they're eligible for forgiveness, their payments, everything.
Oh, nice.
The best advice that I could give for someone in their 20s and 30s.
If you want, you could give 3.
3 things?
3 things since I have 1.
Okay. Oh, yeah, of course. I was going to go off, but you know me.
Okay. Go off. Go off. We got the time. People are listening.
Go off. All right. So, first and
when she goes off, she goes off.
You know what they call me when I go off?
No.
Cardi B.
Cardi B.
Because they say when I get mad, I sound like her. Not that I get mad when I get passionate.
Passionate. There you go.
I didn't dance.
Okay. All right. So go off, Cardi B.
So, the biggest advice is a lot of people, they ruin their credit and they run up their credit cards. Of course, you want to maintain that in your finances. So stay below the 30% range. Good credit, a good utilization range is the 8 to 10% range. So let's say you get approved for $1,000 credit card, that would be $80 to $100. I know it doesn't sound like much, but they want to see that you're able to discipline yourself. And you have to keep in mind the interest rates as well. Those interest rates will kill you. Just because you get approved for a store credit card, like you were saying, you got approved to go to Best Buy and you want to buy the PS5. If you got approved for a $600 credit card and that PS5 is $500.
Oh, you're done.
That plus interest and everything else, like, you overutilize that. All these store credit cards are not reporting to the credit bureaus. But if you don't pay them, then they will. And save your money. Like, I know it's like back in the day when I was young, I was making money. I used to be a waitress. I was working another job. I was hustling, I used to work at a yacht club, dressed like a penguin, but I was making money.
What yacht club?
It was called Venetian Yacht Club.
Where?
In Babylon.
Okay.
Weddings, bar mitzvahs.
I just think if I'm going to the Venetian, I don't expect to see a penguin.
No, the Venetian you expect to see.
Wait,
boats.
Time out. You're talking about like a legit tuxedo.
Yeah.
I thought so it's Halloween just passed. I thought you were talking about a penguin costume.
Yeah.
Sorry. Okay.
Well, I was just like, I was wearing a full out tuxedo. Yeah, working like crazy, but that was hard work. But a lot of people, back in the day, I used to just like go shopping. I was spending money on my boyfriend at that time, my little boyfriend. And I say little because I'm young. At that time, younger. I was spending money on my boyfriend. We're going out to eat. Like, I'm going on trips.
You're treating yourself. You worked hard. You wanna.
I was saving money.
Right.
But it's harder to save your money when you get older because you have more responsibilities. Right. So if I could give myself back then advice from my perspective now, it would be to save your money, invest.
Right. Gotcha. I like that you said that about store credit cards because, you go to Macy's and all these other places that hopefully they're still open.
I think Macy's is. Lauren Taylor is closing down. Breaks my heart.
Yeah.
I love that store.
It's tough. We're in a weird economy right now. So they always ask, do you want to open up a store credit card?
Yeah.
And you should not say yes because there's no point to it.
There's some places that, like Lord and Taylor, they had good deals, like 25% off or
right. That's how they're marketed. Like, hey, if you sign up today, we'll chop off 30% off the purchase price today if you get approved. But if you get it, you can only use it for that store, and I like that. And they won't report it. So they'll only report it if you did bad, right?
Yeah, I made the mistake when I was young.
Gotcha. Okay. So you want to if you're gonna open up credit cards, you want to make sure you open up with like the big guys, Visa, MasterCard, American Express,
Discover.
Back then. Mm-hmm. Gotcha.
I went to a store and they were like, I shouldn't say the store's name because I'm not trying to get sued, but
that's all right.
I went to the store.
We're not promoting anybody except for SweetWaters Coffee and Tea in Smithtown. That's what we're gonna promote right now. They just celebrated 1 year. As of yesterday, November 1st, the store owner, Jeffrey, you should go right after this. It's right across the street. It's great. I go there all the time. That's right. All right. Back to the show.
You need to tag him. But, yeah, I just went to buy jeans, and they were like, the cashier said, would you like to open up a store credit card? They get, like, bonuses if you open up those cards.
To give you the points and all that stuff. Yeah. That's how they get you.
Yeah. So I was like, no. I don't really shop here. And the cashier said, well, it's a Visa. You could use it anywhere. I said, really? And I did try to use it anywhere, and I couldn't. So I closed it, and I owed like 16 cents interest, and they put me in collections.
Whoa.
Yeah. I don't know. I closed the card.
What's bad about going to collections?
What's bad about it?
Okay, what's good about it?
Well, don't be like the person I know that they want to go to collections and get their feel like they could get their debt paid off. That's another thing with collections, is that a lot of people think that by consolidating that past due debt, it's really going to work for them. And that was one of the questions I believe that someone wrote. That debt, like I mentioned before, is already being reported as several other things, like late payments. Every single month that you're late, it literally says on the legend how late you were. 30 days, 60 days, 90 days, 120 days plus. So all of that is being seen on your credit report. Then the fact that it's either a charge off or a collection, and then you're going to see from that company where the collection was sold off to. So a lot of people think, oh, if I consolidate my debt with this collection company, I'll settle and that's it. But like I mentioned, it's still negative in other instances on your credit report.
Okay.
And I'm like, that's not how this... You still have to work on your credit.
Right.
And they settle with you because they bought the debt.
Right. So can your credit get better with having all those collections? Like, if someone chose, I'm going into collections. Like, someone had two choices. I'm going to either pay my debt off and work on my credit that way, how society tells me to do it, or I'm just going to go for the charge-off collections route. If someone takes that route, can their credit get better just without you intervening?
If they paid off that charge-off. And it's like, if they, like, literally, if they settled or put something with good faith with the original company, and they need to know that the account status would be changed. It looks better that you paid off a charge-off.
Gotcha.
Before it goes to collections. Yeah.
And when you say good faith, that means if you're talking to the card company,
the direct lender,
and just saying, hey, I messed up, can we make a new deal? Yeah. And you make a new promise, basically, and you honor it, and then they would help you out. Gotcha.
More than likely. And I always tell people, if you're going through a rough time, you're actually making it worse by not communicating that to the lender. Especially, it's like, if you're going through a rough time, like, let's say something happened in your family, you're going through something medically or financially, they at least have that in, their notes to go back by. Like,
that's good to know. Right.
Because then it's just like, why didn't you tell me? I know during the pandemic, well, we're still in a pandemic. Right. But when this first happened, a lot of companies were waiving interest, or, they were helping with payments.
They were deferring payments too. Right.
I didn't defer my payments, but, I was testing it out to help my clients. And one of my credit card companies, they waived the interest. I was like, oh, thank you.
That's great.
I still paid the bill, but still.
Absolutely.
Yeah.
Yeah, no, I had that. I took advantage of it. If they offered it, I took advantage of it. I didn't deferred payments, and correct me if I'm wrong, deferred payments just means, hey, you don't owe it now, you owe it later.
Yep. A balloon payment.
It's a balloon finance, basically. Yeah. Right. I just want to make sure. A lot of my clients, especially in the insurance world, they're like, oh, wait, they don't waive the payments? I'm like, no. Nobody waives the payments. Nobody.
Yeah.
If anybody does, let me know. But almost everybody just zeroes out the interest for the month. Or they give you 2 months, they zero it out or something like that, so.
You owe that lump sum at the end.
Right.
Yeah.
Especially with car companies, with the industry going downhill and all that stuff. Like, they couldn't manufacture cars and whatnot. They only had the cars in their lot. And a lot of people wanted to buy cars or turn in cars or whatever. And, everyone's leasing or financing. So what did they do? They just ballooned it. They said, hey, look, just pay us later. That's basically it. I want to tackle some of these questions.
Okay.
Because I think one question was actually for someone over 30. So let's see. What advice would you give to someone without any credit history, both in college and an adult over 30?
You have to build your credit.
Okay.
So there are a few different ways to build your credit. No matter what age you are. So you could build your credit. Building your credit, it's like, let's think of things that are universal. Like things that would report to all 3 bureaus. Whether you're getting a car, you have something in your name, like a cell phone, you have the student loans in your name, whatever.
Oh, wow. Okay, so not just credit cards.
Yeah.
It could be auto loans.
Yeah.
So financial lease. Student loans.
It may be hard. Yeah, it may be hard if you don't have anything in your name, but it just depends who you speak to. Like, the same way I had trouble with insurance and I was led in a different direction than I found you.
Right.
It's the same thing with cars, getting a cell phone in your name or anything else, a loan. I always tell people you want to be mindful of the interest rates and how much these things are. Gotcha. So let's say you got approved for a loan. It looks good that you got approved for $5,000, but between the interest and, the rates and everything, at the end you could owe $10,000. You want to look out for that. You could build your credit by having a secured card.
What's a secured card?
A secured card. The way you're like, what's a secured card?
I know what it is. But
I know.
Not everybody knows, and that's okay.
It was just the way that you.
I know.
So a secured card works like a credit. It works like a debit card. Okay. But it translates as a credit card. What do I mean by that? You apply for one. You look to see if you get approved. You have to put money down. You have to put money on the card like you would your debit card, right? Or in your bank account. Then when you spend the money or you use your card, it translates like a credit card. Gotcha. But you still want to keep the same language of just like you would with a credit card. You want to stay below 30%. Gotcha. You want to be mindful of the interest rates and things like that. You could be an authorized user in someone's account to help build your credit. You get the credit history. You get the credit line. Right. I've helped some people with that, but it has to be people and trust.
Absolutely.
Can't just be like somebody to be like, hey, let me use your credit card. It's like, why would I allow you to use my credit card?
Oh, worse, your boy lets you let you be the authorized signer on there, and then you see on your Credit Karma, and you see that thing is already maxed at 99%, and then you're like, yo, why didn't you tell me that your card is maxed out? Now that makes me look bad.
So somebody actually, a client reached out to me earlier, and she's trying to build her credit, and she's like, my sister's overutilization. What should I do? And I asked her how much. I'm like, you could pay it down, but if you're going to be late on your payments or above utilization and things like that, there's really no point.
Just stay
where you're at. It's
like
the blind leading the blind.
Yeah. So let's recap on that secure credit card. If you apply for it is a credit card. It's not a debit card. It acts like a debit card in the sense of how you explained it. So you still have to get approved. Yeah. And you have to put money down. And that credit limit is based on how much money you put down. So if you put $1,000, your credit limit will be $1,000. And what I've learned with those guys is if you show, good records, you stay below, in your case, 8 to 10% on the utilization, you're paying on time, and you are using it at least, because there are people, and we should probably tackle on what if you get credit and you don't use it, how that affects you as well, and other things. We got so much today. Yeah. With the credit card, I see some companies, I can't say them because I don't want to promote them and all that stuff, but they would actually convert that to an unsecured credit card, which is just a regular credit card.
Yeah.
And that would really help you out with your credit score. And then, I don't know if you said this or not, but with a secure credit card, it was still reported to the three credit bureaus, right? Mm-hmm. What are the three credit bureaus?
TransUnion, Equifax, and Experian.
I know. It feels like school right now. I know.
No, I'm just like this. I'm just like...
Okay.
But they are.
Now, is any of them more better than the other?
There's one I don't like too much.
Okay, we almost say who, but okay, forget your personal preference. Like, all right, Cardi B. So what?
Because they're annoying. They're like, oh, we looked at your experience. Oh, they're like, we looked at this before.
You gotta be kidding me.
And I'm like,
gotcha.
Like, what is up with you?
Okay, but if I understand right, because now we're gonna go into the credit score era. Mm-hmm. Almost every bank now is offering like a free FICO score. Yeah. And Credit Karma is Credit Karma. Now, I'll use my little bit limited knowledge. Credit Karma likes to use Vantage Score 3.0. Mm-hmm. And FICO Score came out of FICO Score 8, but I think they're doing FICO Score 10 very soon. And that's also, FICO Score 10 is going to utilize your checking account, actually.
Crazy.
Now, when I applied for a mortgage, when I applied for a credit card and things like that, I will get my report. It is totally different from what my Credit Karma says versus what my FICO score says. Why are they different? Which one should I really focus on? Why should everyone use or not use Credit Karma, I guess? I don't know.
Well, Credit Karma, it could fluctuate sometimes. Mm-hmm. And with all due respect to Credit Karma, they don't report from all three bureaus. Okay. And they're a little late in reporting things sometimes. Okay. I say sometimes.
Gotcha.
I've had clients that have contacted me in a panic. Like, I just had this added to my Credit Karma and they showed this. And it's like, we had that deleted off of your report. Let's go over it. Let's, compare the two.
It takes time, like 30 to 90 days almost.
People don't realize
stuff, right?
Your credit takes time. Like, I'm not somebody from the streets or, doing anything illegal. It takes time, but you also have to do your part too. Gotcha. Yeah.
So again, to build your credit, if you have no credit, the best thing to do is open up a secure card.
You could be an authorized user. Somebody loves you enough.
Okay.
I wouldn't advise co-signing, but, like, let's say you're younger and your parents get you a car. Mm-hmm.
Oh, there you go.
Has to be the
That'll
co-signer.
do it.
Things like that.
Right.
Be on the account.
If I want to be an authorized user or signer for under someone's card, what are, like, some key elements I should look at before I put my name on someone's card to help me out?
Well.
I know the answer, but.
It's like, because I'm like, people, you have to make sure, like, that they're in good standing. What do I mean by that? They're paying their bills on time. They're below utilization. Mm-hmm. Look to see, like, what their limits are and their history is with that. You don't want to jump on something and it's.
Does length of time, like how long they had that credit card mean anything?
Yeah.
Okay.
And you're in good standing. Yeah.
Okay. So if I wanted to add myself to my boy's credit card and I see that he just opened it up like 2 months ago, but he has another one that opened up 10 years ago, I probably should opt in for at least divide my attention towards the
longer 10-year one. Yeah. Gotcha. Because then it's like with the one that's like more recent, it's like you're building it with him.
Oh, okay.
Yeah.
Gotcha. Okay. All right. I have some more questions for you.
Okay.
If someone is in debt, I think this is a broad question here. If someone is in debt, do you recommend consolidation or forgiveness?
I have a few questions. So debt, like student loan debt.
Is there good debt out there? Is there bad debt out there?
I mean, with the new FICO score coming out, like the new FICO modeling, they're recommending for you not to pay all of your debt, like just leave a little bit because of because of the way that the scoring model is. When I say good debt, I mean like you're in good standing. Like you're paying your bills on time, and things like that. Not like you just went and ran something up and you just said done, like, and you don't pay them.
Gotcha.
Yeah.
Okay. All right.
But as far as consolidation and stuff, that's something else to get into.
Oh, that's credit at 102.
Okay. Well, I could explain it now.
Go for it.
To answer their question.
Yeah, we should probably honor their question.
Yes. So, with consolidation, what a lot of people think is that, like I mentioned before, if they're in collections, they could take all these different debts that's in collections and consolidate it into one. Unless these companies are agreeing to honor the fact that, you know, you agree to pay this, and maybe they change the account status, or they're agreeing to delete it off of the report, you know, you're not just going to pay that and expect that it's gone. It's still negative on your credit report. But if you're in debt without it going to collections, you could consolidate, and I'll explain how. So besides a personal loan, you know, once again, look out for the loan terms, rates, and conditions. You don't want to, just because you get approved for something doesn't always mean it's good.
I feel like you posted on your Facebook too many times.
Yeah.
That's true.
It's like, you know, that's like you going somewhere. Like, how many times when we were younger, you were like, I don't know, something happened. You're like, oh, I found a ride home. And your mom's like, with who?
Oh, yeah.
Oh, never mind.
Oh, yeah. Yep. No, that's true.
I'll come get you.
Yeah, no. Okay, so I don't understand that forgiveness part. Do you?
Sorry.
Oh, yeah.
With forgiveness? I told you I drink a lot of water.
No, you're good.
So with forgiveness, forgiveness could happen, like, let's say if they were in extreme hardship, like they had something happen to them medically or financially, but you need to express that to the lenders. I know, like, with medical, there was this one time, it was years ago, but I don't know what happened. My insurance didn't pick up. I don't know. I was like, I guess I was in between insurances. I had to go to the ER.
You didn't have me as your agent at that time.
Yeah, it was my medical insurance. Weird. This was years ago. And I got hit with a bill for like $15,000. I wasn't working at that time. So they just wanted to see a bank account, you know, unemployment statement, whatever. And I had that forgiven. That's an example.
Gotcha.
That's an example. But once again, you have to let these lenders know that.
You got to talk to them.
Yeah. But with consolidation, what I recommend is something called a balance transfer. This will help you save a lot of time and money and interest. So what you do is you first off have to apply. You have to see if you're even qualified. Let's say you had $15,000 worth of debt from different credit cards, and then you apply for a balance transfer credit card. You're approved for $20,000. But all these interest rates are like astronomical on these cards. You take all of that and you put it on this one credit card. You'll save on the interest. You're able to pay down your debt faster, and you're paying your bills in one place. You know?
Gotcha.
That helps.
Do you recommend someone with that scenario, right? It just sounds like someone just can't manage their credit. So do you recommend someone to talk to you before applying for a balance transfer, or should they just do it on their own and hope to God that they get approved for the balance transfer? Because that's another credit hit.
Yeah. I would say anytime you go to apply for something, try not to do it, you know, apply more than 2 to 3 times, because those inquiries start to tell
a month, a year?
Within a few months time range.
Oh, okay.
And you know what's so bad is like when people go to apply for a car or a mortgage and they keep running your credit.
Oh, yes.
And then those inquiries hit.
Right.
You know? So just because you go to look at something doesn't mean you have to apply. Like, what if I go to a car dealership and they're like, okay, let's see what you're approved for, and you don't like any of these cars? They just ran your credit.
Yeah, and they actually shop. What most people don't realize, they shop not just one finance company. They shop like 10 or 15 of them at once.
I had a client a few weeks ago. She got hit with 10 denials. Oof. And then a car broker I work with got her approved and everything.
Gotcha.
Yeah.
Okay, that's a little intense. So we're talking about different types of cards, balance transfer cards and whatnot. This other question is, what are the cards, credit cards, you recommend according to the following lifestyles? Traveler, online shopper. And then he said, I don't know. Or etc. So yeah, is that something you, I feel like, I don't know, are you allowed to share recommendations of what kind of cards?
Why not?
I don't know. I'm learning about your business as we speak.
I love cashback rewards or something with rewards or points.
Right.
there are certain cards I don't like because they usually have higher interest rates.
Gotcha.
Or they have like annual fees or fees to apply. And,
right.
You know, it's
doesn't
kind
make
of
sense.
a lot. Yeah.
Right.
I love cashback rewards or travel rewards. So I had, so you know I travel. So I have the Marriott card. I love that card.
Oh, that's nice.
Because my points or whatever, it goes towards my stays. I have like travel cards, and that gets applied towards me traveling because I do travel a lot.
Nice.
Well, I was. Past tense.
I know.
But still, like, you could put it towards other things. Like, they give you that option for shopping or cashback or whatever. I love cashback rewards because it's like, hey, if I got this amount of points, I treat myself.
Right.
And I could deposit that into my bank account.
Right. Now, are there any cards that are just easier to get based on your credit score versus, like, with I feel like the cashback ones would be harder to get approved for versus, like, a zero interest one. Is that true?
Well, with those, you might have to build yourself a little bit.
Okay.
But I would say good credit cards to start out with, besides a secure card. Capital One is good. I love Capital One.
Right. They approve almost everybody, and Discover too, actually.
Yeah, I was about to say Discover.
They got this. And if you're in a school still, you should definitely apply for the student because it's like the same perks. It's just you look at it from a student point of view, right? So I guess like the guidelines are easier. Is that what you've seen?
Yeah, like they're a little easier on you. I would also say credit unions. I love credit unions.
Really? Okay, gotcha.
So with credit unions, I would establish a bank account because the difference between a credit union and a regular bank is that the credit union is like kind of run, instead of a more corporate sense, they're more run by the people. Like, you know, like kind of like a democracy.
You're right.
So it's more run by the people, and you know, they're more focused on their needs versus a corporate standpoint. So I would establish a bank account with a credit union, and they'll be more apt to want to help you with a credit card or a secure card, and they have better interest rates and better approval rates
than the big banks. Gotcha.
Yeah.
Okay, that's
they're more
good.
Personalized. Yeah.
So if I need to recap everything we're talking about, right? If I'm like a young adult or someone that has bad credit, I want to say below 30%. But you prefer 8 to 10.
8 to 10% is great, but let's say you have a credit card of $1,000 and you're using $300. You have to keep in mind the interest rates that add to that as well. So
what if somebody just like 30%. Sorry, I didn't mean to speak over you. Yeah, it's just because I remember one person says I got to Chase Freedom, got $500 limit. I got approved, young dude. And the first thing I told him, make sure you don't go over 30%. You know, if anything, train yourself to not go over 20. So his question was, what if I spend, like, I get the PlayStation 5, right? I say I spend $300. That's way over 50 right there, Ren. What if in that same moment or that same day within 24 hours, I just pay it back down to zero? So what if I do that every day with the card? Because I'm trying to build my credit. I'm trying to get the cash back, the points and all that. Is that okay if I just keep paying it off? I max it out. I pay it off within 24 hours.
I mean, even if it's within 24 hours, that's what could make your score fluctuate a little bit, like a roller coaster.
Really? Okay.
Yeah. So people all the time are like, yeah, I paid it off in full. They want to see discipline.
Gotcha.
Yeah. I mean, even if it might be better that you paid off right then and there, but still, you know, you're overutilizing that limit. And when you're overutilizing the limit or the ratio, the debt to income ratio fluctuates because that's 30% of your credit score right there.
Do you think that the credit card companies like to see, say you stay under the 10% and you keep paying that so that way you could keep on using the card? It's still a roller coaster, just a smaller roller coaster.
Yeah.
Do you think that's okay?
I would say that's better, but it's good to use your credit card because if you don't, they'll close it out. And then you have to ask them to open it.
Why do they do that? You pay it off, and that actually leads into this other question. Why paying things off makes your score take a plunge? And I could use mine, for example. I have a credit card. Doesn't exist anymore. I'm not going to say the bank's name or anything like that. But it had a $3,000 limit. Zero balance
when they do that.
Zero balance for years. COVID hits. I get a letter. We close your account for inactive
An activity, yeah.
Yeah.
You still have to keep it open. That happened with me and a
No,
bank,
but it's
too.
like I want it open. You know?
I'm like, why would you do that?
You don't know why they do that?
No, I know why.
Can you tell us why?
I'm like, no, I'm saying to them, like, why would you do that?
Oh, okay, gotcha. She's speaking for you.
Like, why would you do that?
You need to go off. You've been a little mellow this past past 5 minutes here. I need Cardi B here. Why would they close that off? Because that I'll be honest, that pissed me off.
It pissed me off too.
Okay.
So I had, let me tell you something else that pissed me off. So I have.
Wait, can we just focus on the question?
My bad.
It's all good. You about to go off. You already let go of your hair just now.
So, you should definitely keep those cards open. Like, even if you have a smaller credit card and it's a store credit card, buy little things. And I know it's annoying, like, you have to keep up with it, but they want to see some type of activity. So. But
do you know why they just close it out at $0? Like that card, I haven't used it for like 3 years.
But it didn't affect your credit score so much where it took a plummet, right?
I mean, my credit score went down, but not then crazy because you're losing $3,000 of a limit there.
Yeah.
So then your utilization goes up just naturally. So do we know why, or we're not sure why?
They feel like you're not an active person.
They just don't want you as a customer.
I wouldn't say all that, but
I talked to one of the reps, and I feel like they don't even know because
they're not credit specialists.
No, they're really not, and that's what I want to make sure.
It all depends who you talk to.
I want our audience to really understand something. When you call the customer support line, I'm so happy you said they're not credit specialists because we think that they would know everything.
They don't.
No, they're reps.
I wanted to choke
and nothing. Okay, let's. Okay, Cardi B. Because it's an innocent thought. It's an innocent thought that if I call up, whether Discover, American Express, Visa, MasterCard, whoever, it doesn't matter. I have questions about my credit card. Why did you close it? I need it back. If I wasn't so who I am right now, they would have been opening up credit cards left and right.
Right.
Because all they want to do is make me get me off the phone.
Yeah. Because
their time to be on the phone for however long. And I remember this one time she was like, well, we could get that card back. And not knowing she could get, like...
reprimanded. In trouble.
No, not that. No. You got to carry... These words are crazy. Let's just say I applied for the Chase Freedom and they shut me down, right? They close out the account. Technically, she could get me the Chase Freedom credit card, just not my credit card. Not my credit limit. So she's like, yeah, we'll just... And this is where I got her. This is where... I still had to be a Christian about this, all right? So she was like, yeah, we'll just reapply. I'm like, reapply? You just said you could get my card back. She's like, yeah, we could get the Chase Freedom back for you. I'm like, okay, hold up. You're talking about product. I don't need that. I need my limit back, you know? She's like, oh, you can't get that. You have to reapply. And I'm like, but that's a hit.
It's so annoying.
Yeah, so as people are watching, listening, you have to realize that. Like, if you lose it, you could call them back, but they're going to reapply. You might as well do it yourself.
I'll tell you what happened with me.
Okay.
So I was, I was with this bank. Well, I still am with them.
Okay.
But I've been with them a while, since I was in college. And I had several credit cards with them that was pretty big credit lines. And during this time, I have marketing and stuff like that. I noticed on 2 credit cards, one was a business card and the other one was a just a regular credit card. I had charges on it. And I'm going through my invoices and my receipts. I'm like, I didn't do this. So I also added authorized users at that time. So they basically said, well, you know what? We closed it out. And I'm like, you closed my card? Like, I'm having a heart attack. And I'm a credit specialist, so that hurts me. Like, I'm like, what I do? Like, I'm calling, and I'm being sent to so many different phone numbers. I'm like, these people don't know what they're talking about. So this one girl called me, and she's like, yeah, we decided to end the relationship. I'm like, who are you to end this relationship? Like, I want to choke. Like, not that I would choke her.
No, but I get that. I hear that saying a lot.
But it's like, I'm going to end my relationship with you because I've been with you for so long. I pay my bills on time. You see my bank accounts. Like, I put money in the bank. Like,
they try to make it personal. And I'm like you realize I'm the reason you got a job, right? Like, come on.
It's like, but you know what? it's like, this is someone, it always depends who you talk to, because I spoke to another rep and they were like, okay, Miss Costanza, like, we'll see about what's going on, because you need somebody that understands. That's like the biggest thing between a transactional person and a person who knows what they're doing. I was so upset. Yeah. Right. And I'm like, what is your name? She didn't even want to give me her name. I'm like, what's your boss's name? She just flat out gave it to me. His first and last name. I'm like, why are you scared for it? Give me your name. Why are you scared? Like, I'm not going to come to Texas. Yeah. You know? But they do. But they do. Maybe I will. But they do. But they do that because they want to know that you're actively with them. Like, you know, it's just like with anything else. Like, if you have a membership and you haven't been with them, they're like, okay. Right. They just kind of end it. So I've had to learn, even if you're in good standing with these cards, it could be a regular store credit card or another credit card. Do something. Right. You know,
keep a balance. Buy a pack of gum.
Yeah, I was about to say, buy a pack of gum. Buy something small.
Keep the balance on there, so that way they don't mess with the credit limit. Yeah. Gotcha. Now, this happened to me personally. I don't know if you've seen this before, and I want to tag back to the credit unions. We could also apply this logic to the big banks, because this happened to me with the big banks. I have a bank account. I'm not going to mention the name of the bank because they didn't. I have nothing against them, but I don't keep my main assets with them. It's kind of like, it's just there, you know? Yeah. So I have a savings account with them, and I have a credit card with them. And if anything, that was my first ever savings account and my first ever credit card. So that thing been around for 12 years at least, you know? Yeah. But I don't keep any deposits in there. So one day I just noticed that, I get my alerts on, that my credit limit credit limit decreased, therefore everything else went up except for the credit, and the credit score went down. I'm like, what the heck? And then I open up the bank and I look at the notes and everything like that, and they said they don't see a relationship because of the amount of money is in that savings account. So when I called, I was like, what's going on here? They're like, well, you don't have a lot of money, basically. That's my way of saying it. They didn't say that. If they said that, I would have blasted on Twitter or something. But basically, you didn't have much deposits. You didn't have much assets in there. Sorry. We're just going to wait for that. Okay. I should have brought a different water bottle. Nah, you're good. I didn't have much cash in that savings account. So that's why they lowered my credit limit on my credit card. But that credit card, I use that. I use that often. So that was a wake-up call to me. So it could go both ways. Yeah. You know, if you want to apply for a credit card, it's better to have money in that bank. Yeah. So that way they could see that relationship on that. And I mean, have you seen what I went through on your end? Yes. Yeah.
It's just like, it's like so tricky because it's like, who are you to do this? Like, how would you do this to me?
Seriously. So a learning point right here would be just have money with that bank.
Yeah, that's what I was saying before. Like, if you're applying, let's say for a credit union, like you want a credit card with that credit union, have an account with them. It looks better. Establish yourself for a little bit of time, then apply.
Gotcha. Yeah. Gotcha. Now, back to, let's try to break it down in some bullet points here. When you pay things off, your score takes a plunge.
With who?
Well, I mean, like, you know, like I know some people when they pay off their mortgage, their credit score goes down. You know, or, you know, you pay off your credit card and then your score should go up, but then they cancel out your card, so then your limit goes down and all that. So I guess it's just based on the credit utilization, right? Yeah. Number of inquiries, length of time of the credit.
And if they're closing that account, that could happen. Like, you know, like if you paid off your mortgage or whatever, it could show up as closed, and that's why. You know? And
that could still hurt you because technically, when we say hurt,
show it's in good standing.
Right. It's a good hurt, I guess, because technically you did your due diligence. It's just now you don't have a lot of available credit. Yeah. So that's why your score will go down. Am I in the right field? Yeah. I want to step on your toes.
No. Like I'm taking it all in. So your score going down, there's other factors. So even with me as a credit specialist, I've had to learn the art of meditation and just
what?
I've had to learn meditation and just because, we're working on your credit to take off the negative and derogatory items. I'm not doing anything to make your score go down. I don't have that power to do that.
Gotcha.
Nor do I want to.
Right.
So, I've had clients before in the past contact me like, my score went down. And it's like, what happened? Like, I'm like, what's your score now? I'm like, it went down a point. Like, literally a point. And I'm like, did you apply for something? Yeah, but still my score went down. And it's like, you're giving me anxiety. Like,
gotcha.
That's what I mean. I had to learn
meditation.
But it's, there are so many factors. Like, if your score went down, you have to look at everything. I've had clients.
What's considered everything?
Yeah, like I've had clients, I've taken off negative and derogatory items. Their score went down. Why did their score go down? You overutilized your credit card. Okay. Something else just popped up on your credit report that's beyond me. Like, it just happens, you know? You inquired or you applied for multiple things. You're late on your payments.
Gotcha.
All of those things are factored, and it's not necessarily like that one account. You have to look at everything, and you could, look at your credit report with a credit monitoring site, freecreditreport.com, freeannualcreditreport.com, I'm sorry.
Okay.
That's what I mean. There's so many other factors.
Wow. So it just pays to have someone like you in the mix, because you do all of that. Because if I just go on Google, there's going to be so many websites that are just giving me the promises, but they're just fraud.
I don't know about fraud.
Well,
some of them.
There is freecreditscore.com, but that's not the website. It's free annual credit score, right?
Free annual. You could get free reports from the credit bureaus themselves if you go on their websites, Equifax, TransUnion, and Experian.
Gotcha.
Freeannualcreditreport.com.
Is that different than what we see on the FICO score? Because I get that for free, as well. And
they have different scoring models. Like the new scoring model that's coming out now in the next few months for FICO, they're looking at your past 24 months of history, your past 24 months worth of utilization. So, if I'm speaking about that person I was speaking about before, you're about to get screwed even more if you don't want to pay your payments on time. They're factoring all of that in more.
Gotcha. This question is, what's the best time to pay off a statement to increase the credit score? I don't, obviously before the due date.
Okay, there's a trick. Ready for the trick?
Yes.
Okay. So let me tell you something. You have to look at your statement closing date.
Okay.
I made this mistake before. When I was working a 9 to 5, I got paid on the 1st. It was Friday the 1st. I had some money left over. I was like, wow, I'm going to pay this credit card. Paid it. The next month I get hit with a late fee. I'm like, what? I paid you before the due date. And they said, yes, but you paid before the statement closing date. And that's a factor. You have to look at that statement closing date. I would also say you want to, if you're just making minimum payments, yes, you're paying your bills on time, but that's really going towards the interest and not the principal, So that's why you're not really tackling that debt, but you could split your payments into two. And that's what would bring your score up. So this is a trick.
Okay.
Ready?
I'm ready.
You have to look at your statement. You have to look at your due date.
Okay.
And you're going to split those payments into two. So let's say you owe $200, split it 100 and 100. You're going to pay 3 and 15 days before the statement due date. So let's say the statement is due on the 20th of every month. 3 days before that is the 17th, and 15 days before that is the 5th. So just mark it on your calendar, do automatic bill pay. But this tricks the system, because to the system, it looks like you pay more than the minimum payment, and you already paid for that month. And for the next payment, you're paying towards that next month. And that's what would help bring up your credit score.
That's where it would jack it up.
Yeah.
Wow. Yeah. Okay. So that's a great secret, and they don't teach that in school.
Nope.
So that is great right there. I wish we kind of said that in the middle of our podcast so people could kind of search for this answer. No, but it's all good.
Sorry.
Quick question on that. Minimum payment. Should someone make, based on your tips and tricks right there. Should they do the minimum payment or should they pay extra?
Always pay more than that because the minimum isn't going towards anything.
Right. So your illustration, is that based on a minimum payment or just paying extra?
That's just paying what you owe.
What you owe. So the minimum payment then.
Yeah, gotcha. I would pay, let's say your minimum payment is $25, but you owe $200. I use that illustration.
Oh, the balance is $200.
Yeah.
Gotcha. I'm sorry. Okay.
No, it's okay. But with minimum payments, I always recommend paying at least double, triple, or quadruple what you owe. Because think about it. That's like, let's say there's a fire, right?
Okay.
And I'm like this with a little bit of water. It's like, it went down a little bit, but not that much. You gotta get that big bucket or the firemen to take it out.
Right.
You're not doing that much if you're just paying the minimum.
What if somebody is cash sensitive? I don't have a lot of cash, and
I don't have a lot of money.
Yeah, I don't have a lot of money. So if I could pay it off, basically, or I could throw a bucket of water on the fire, but I'm gonna use my credit card again. It's gonna be insanity for me. Yeah. So what's a good? I mean, this is what I did, and it worked really well for me many years ago. But yeah, with the budgeting, what I did was, say my minimum is my minimum amount due is $25, but I got hit with interest charge of $50. My new minimum in my eyes is $75. I just add those two together.
Yeah.
Is that a good trick? Is that She Does Credit certified? Do you like that one?
I do like that one, but I would still pay more because think about the interest.
If I could pay more, I would. But if I can't, would that be a good good mindset? Yeah. Instead of just doing 25, because a lot of people, they like, I only have to pay 25. The minimum. True. Yeah. Okay. Oh yeah.
But true. A lot of people they'll rely. See, I'm grateful that I have my credit line that I could lean on. A lot of people don't realize these little $300, $500, $1,000 credit cards, they're not going to get you much. God forbid something happens, you need a place to stay, you need a car, you need something.
They ain't going to do nothing.
Yeah.
That's true.
It's not going to do anything. So
that's true.
Your credit's like air. You don't realize that you need it until you can't breathe.
And that's how we're going to end this off right now. So, hey, thank you for being on the show.
Thank you for
I'm excited for Credit 102, where we're going to get more deeper than where we did already. Okay. Is there anything? Tell everybody how to find you again. What do we do? They could obviously look in the caption and get your name and number and all that stuff, right? Yeah. She Does Credit. Thank you again for just being on the show. Thanks to Rob Taormina for helping us out here and everything like that. Thank you for SweetWaters. Again, congrats to the 1 year anniversary for that. You've been doing this for 3 years?
Yeah.
So congrats to that. I've been doing my business for 3 years. So there's a lot of anniversaries today. Power of 3. Everything comes in threes right there. So anyways, thank you for listening, everybody. You have a great day. Listen to the next episode coming soon.
Awesome. This was a killer to have in there.
This is the Your Agent podcast, where Ren and Lauren get fit on finance, insurance, and teamwork. We will be covering topics with professionals from different industries to give our listeners the insight to be financially fit and motivate them through all walks of life. Special thanks to our friend Matt Pisani for his music in the background. You can go download free on all streaming platforms. This is the Your Agent podcast.